What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is February 8th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to dive into why I believe corporate treasurers, the topic in which everyone was ranting on about back in 2020 and 2021 following the news from MicroStrategy, could be the catalyst that actually carries us out of this recent correction that we've had in December and January. And I do believe we're going to see it faster than we may expect. Okay, so without further ado, we've got lots of things to dive into this video, but two quick things. Not only are we going to be doing a $1,000 giveaway, so stay tuned towards the end of the video for that. There's a special event that's going on at the moment that I want to share some details with you guys on. And outside of that as well, we've got a quick sponsor. So I'll see you right after our quick sponsor. And our sponsor for today's episode is Ember Fund. The Ember DeFi Index allows you to invest in the top 18 coins weighted by market cap with one click of your smartphone. This eliminates the need to perform countless costly transactions manually and saves you time and money. Its largest holdings are Uniswap, Aave, MakerDAO, Loopring, USDC, Sushi, and Yearn, which get rebalanced monthly. It's up 56% since its inception. So if you're interested, click on the link down below to download the Ember app and earn free Bitcoin when you deposit into the Ember DeFi Index. Alrighty, everyone, so let's go ahead and kick things off here. To start here, I want to go ahead and emphasize one big thing. Here in the short term, over the next day or two, considering the kind of rally we've had here and considering how the daily price action is looking now, I wouldn't be surprised if we see a slight pullback here down to 42K, 41K. I'm not here saying absolutely go all in. And again, as I've advocated here on the channel, don't think short term, don't mess with leverage, right? But as we've talked about on the channel, we've been emphasizing how on the broader spectrum over the course of the next 2 or 3 months that we have come down to our target range. We hit the 30, 35K range, came down here to 33,000. And a question I'm asking now is, did you buy the dip? Did you guys buy the dip? Did you get some discounted Bitcoin, right? Because we were following a lot of the different data science models, and we've already spent a good amount of time diving through these, taking a look again at all the things that we have at our disposal. But in today's video, I want to spend some time to talk about something a little bit different and go more towards talking about some very clear visual signs that inflows are coming into the crypto space from institutions, from traditional finance, and the traditional equity markets. There's a lot of capital inflow signs that are signaling positive remarks for the crypto space. So let's go ahead and take a look at some of them. The first big piece of news that came out here as of recent over the last 24 hours is the news from KPMG. Now, if you guys don't know KPMG, they're one of the big 4 accounting firms out there in the world. And because of that, they hold a really high place in the traditional world of business. But outside of this as well, seeing that they're getting into an asset that is generally seen as speculative, like cryptocurrencies, and actually seeing that this is a maturing asset class, and deciding and actually taking the initiative to publicize that they're adding it to their balance sheet, that is a major move for crypto assets. It's one thing if MicroStrategy, kind of mid-sized technology company, although they are time-tested and we're actually more of a kind of safe company themselves, and even a large company like Tesla getting involved in Bitcoin, those are one thing, right? But to have a traditional company like KPMG now starting to showcase that they believe that Bitcoin and Ethereum are tokens worth putting on their balance sheet, and on top of that, they did a great example of showcasing how if companies were to be concerned about the carbon emissions tied to Bitcoin or Ethereum through proof of work mining, that you can buy carbon offsets, right? You can buy carbon credits. They showcased how a large institutional company can do this in a way that meets their goals and services as a probable asset for corporate treasurers. That's great news. Now, to be completely candid with you guys, and I don't want to fluff this over the top, some people really talk about headlines, oh, it's just great news, it's fantastic. We don't know how much KPMG bought. I would really have wished that in the press release they would have put that out, and I think that as we go through time, although I don't actually know exactly if KPMG is public or private, there should be a way where in the future, through financial reporting, we're able to see how much they actually acquired on their balance sheet. I digress though. It is positive news. And again, one important thing to emphasize that we talked about months back here when we were up at the all-time highs. The one thing we said with sheer confidence was not so much that we were going to absolutely start collapsing down in price, but we talked about the fact that corporate treasurers are not going to buy at new all-time highs. They buy when assets are at discounts. They rotate assets in their balance sheet, whether it's up, just basically cash, buying it on a discount, or maybe, for example, their equity plays have been doing really well. And now they're going to lock in some of those gains and rotate to fixed income assets like bonds or treasuries, or into new asset classes like cryptocurrencies. That's how a corporate treasurer thinks. They do not buy at these kind of heightened peaks in price. They buy on discounts when no one else is willing to buy, because they know that it's just like shopping. It's going out, finding things that you like at a discount. So if you guys want to read into the press release, there's some details online as to some of the statements they said, that they see it's a maturing asset class. Investors such as hedge funds and family offices to large insurers and pension funds are increasingly gaining exposure to this asset class. It's a really good sign to see. Now, outside of that as well, there's another key thing that I would like to emphasize here. Tesla, its recent filing just the other day, had reported that their Bitcoin holdings are right under $2 billion. Now, this is not a new addition of Bitcoin, but I want to signal here again that even one of the largest companies in the world here, Tesla, is continuing to hold its Bitcoin. And they're proving through the test of time that this is actually a real test of store value. They've been able to showcase here that even throughout the volatility, even though 2021 has been a shaky year and 2022 hasn't been the best start, still from the point that Tesla had bought their position, it's sitting right around $2 billion. From the original, I think it was $1.3 or $1.4 billion addition of Bitcoin on their balance sheet from available cash that they have. This means that they've been able to actually see a net profit here. They've been able to hedge against a lot of the wave of inflation that we've seen. And all the while there's volatility, of course. It's pretty much a given here if you're investing in an asset that's anywhere from around a $660 billion to $1 trillion market cap, right? At the same time, the store value element comes from the fact that if your time preference is not tomorrow, right? That's pure speculation if you're trying to make money by tomorrow. But if your time preference is over the next coming months, the next year, the next 5-10 years, there is no better performing asset than Bitcoin and other cryptocurrencies like Ethereum. Plain and simple. There's just no market like that, traditional equities, that are going to do that for you. They may be able to help you hedge against inflation, and if you really play your cards right, you can still make great returns in equities, even going beyond just hedging inflation. But I digress. Again, take a look through the report, guys. That's right. The aggregate amount originally was $1.5 billion. Fair market value is December 31st, 2021 was $1.99 billion. So really, really cool stuff here, guys. Now you guys can dive into the actual form filing. This came again from the filing with the SEC, but we don't need to do that here. It's a very, very lengthy document with all types of different discussion points. Now, the third thing I want to talk about here that I think really gives us a good visual sign that institutional capital is ready to flow back in and buy the dip is the launch of Valkyrie's Bitcoin Miners ETF. Now, this was recently approved by the NASDAQ, but one important point that I think is important to discuss outside of the actual product itself, which we'll discuss about in a moment, is that when you start to see new products come to exchanges like the NASDAQ for approval or to the SEC to launch new products or ETFs, this is a positive sign here that institutions, right, the institutional players that are building these products, deploying new means and vehicles for people to get exposure to the space, they're expecting that there is going to be buy-side momentum in the market. They're expecting that there's new capital flows that want to come in, new cash positions, or people selling their equities into cash, wanting to reallocate into crypto. Now, for those curious about what this ETF means or what is it? Is it a Bitcoin ETF? No, as you can see from the title, it's a Bitcoin miner ETF. This basically is getting exposure to companies where over 50% or more of their revenue, likely much more, is coming from mining related activities. So I think in this fund, they have companies like Riot Blockchain. Maybe I might be wrong on that. I know they've got Bitfarms, CleanSpark, Argo Blockchain, Hive Blockchain, all kinds of major publicly traded companies out there where, again, institutions can not only just get exposure to crypto, but they can start to get exposure to these companies that are actually participating in mining. So again, I'm not here to say that this is, again, oh my God, it's going to be millions of dollars coming into Bitcoin. But again, this is a visual sign, a visual cue of institutions buying the dip. of institutional ETF and ETN creators, like these people building financial products, that they're growingly confident that this is a time to launch it, that there's going to be new flows coming into the market. Now, the one thing I'll be completely candid with you guys on, and we talked about this the other day, I would love to see more volume coming into the market, to be fair. If we take a look at the aggregate volume, I think we can get the Bitcoin all-time history index. So we type Bitcoin here. Let's see here. Maybe I'll type it all-time history index, right? So we can see here that considering the sell side candle we had, and of course it's been multiple days of buying, getting back above there, right? We've had some good volume candles here, but I'd still like to see a really solid breakthrough and stuff. And I think, to be honest, we might not see that, similar to how back here we had kind of low volume trading back up to the range to make up for those dramatic sell side or capitulation and liquidation candles. I think we're going to potentially have that major volume breakout once we get a retest up here sometime in March or April, right? The momentum here is strong. We're probably not going to be chopping as sideways as we did back here. And the market's ready now, as we've had a higher low here, a signal here that the market is optimistic that we are going to probably continue to climb up here and start to chart it back to those all-time highs, maybe face a little bit of rejection, just a small pullback, nothing like we had before, and then really start to leapfrog higher. No one really knows exactly how it's going to play out, but I think we're seeing the clear signs here of a trend reversal back to the upside. So don't get shaken out here over the next day or so. Again, I'm looking at the candle here. The momentum has been really strong. We've recovered, just bear in mind, I think around like 34, 36% from the absolute lows to where we are now. It would be expected that we might see some kind of, some kind of multitude of days where we pull back, just like we saw back here when we went from 30K up here to 42K. It's normal, it happens, it's part and parcel of basically these kind of rallies. So I just want to emphasize that. But at the same time, I think that the longer term trend over the next couple of weeks is much more sustainable. Now, as you guys have been patiently waiting, I want to spend some time to talk about this opportunity where you guys could enter in for a chance to win up to $1,000 of Bitcoin. So how can you enter in for this chance to win? Well, I want to go ahead and let you guys know about a challenge we're launching for my startup, Digifox. It's not a sponsor. This is my startup. I founded some time ago, and we are launching a new feature called Get Paid in Crypto. Now, this is going to give you the ability anywhere in the United States to allow you to receive a portion or all of your salary in the form of cryptocurrencies, including Bitcoin, Ethereum, and Litecoin, and gives you the ability to earn interest on it. Now, I don't want to bother you guys too much on this, but we're giving away $1,000 of Bitcoin for our new closed beta that we launched. So if you guys are interested in even just testing out the feature or potentially winning big, then you guys just simply have to check out the link down below in the description to the tweet here, where it'll bring you to the tweet thread giving you all the details on how you can actually participate and enter in for a chance to win $1,000. I want to emphasize a couple key things here, guys. First off, we are really looking for Android beta test users. We've got a lot of people on iOS side, but we want to make sure we really master the experience for both operating systems. So if you're on Android, all right, definitely consider trying out the beta. We'd love to get any feedback from you guys. Positive, negative, doesn't matter. Any ways we can improve it for you. And overall, what we're mainly trying to test here is if users are able to get through KYC, if they're able to go through and make their first deposit, and really just get a feel for the platform and give any feedback or improvements on how we can simplify the experience. But we're very excited to bring this feature out to the market here, guys, and get your feedback on it. And again, there's a chance to win at the same time. So if you're looking for a way to support me, guys, this is one of the best ways you can support the channel here. And outside of that as well, it's a good chance to potentially win. All right, anyways, I've rambled on enough, guys. You guys, if you always stick to the end of the videos and stuff, I'm so thankful and stuff that you guys are willing to listen to me ramble on for so long. And I hope it provides value for you all as you start off your day. But I digress. I hope you all have a wonderful rest of your day. Make it a good one. Stay safe, trade smart, and I'll see you all in the next video. Take care, everyone.